Spot price is a very interesting concept that we stackers and collectors of coins really do hold a lot of value in. Ultimately, it tells us what gold and silver is worth. And when you have situations where you've bought coins at very different prices that are exactly the same weight, it can often manifest itself in quite real terms as to how different the purchases are. But my argument to you is, it doesn't matter. Despite the fact that these two gold coins are over £150 apart in value, it really does not make any difference at all what spot price is when you're looking to buy gold or silver. Hello everybody, Backyard Bullion here, and a warm welcome to you all joining me for my sixth part of my complete guide to investing and stacking gold and silver. Today I want to talk about the spot price, this much mythicized phrase and concept that we seem almost beholden to as silver and gold stackers. It determines what the price of our metals will be when we're buying and when we're selling, and when we're just sitting there with our big piles of shiny appreciating what they might be worth. But as a concept, it's a really weird one, and my argument primarily in this video is going to be about why it doesn't really matter what the spot price is unless you're looking to sell. So if you're just looking to accumulate and buy at the start of your stacking journey, my argument to you is that spot price is irrelevant. It really is. Now, a lot of what I'm going to be saying in today's video is just my own collection of thoughts, opinions, hints, tips and tricks that I've learned over my tenure, both here on YouTube and stacking and collecting gold and silver. Please do not take what I'm saying as financial advice. It's meant as a way for you to question what is right for you in your circumstances. So please have a good hard think before making any financial decisions. Now, the spot price is definitely something that I've kept an eye on a lot in my tenure as a silver stacker. I remember some of my very first purchases looking at the spot price. In fact, the spot price was one of the first metrics by which I thought silver was a good thing to buy. I was first starting to look at silver back in 2015, and then silver was very low in its price point. For us in the UK, it was under £10 an ounce as a spot price. Now that was actually really confusing for me because, as a lot of other UK stackers, and indeed stackers all around the world that have to deal with higher premiums and taxes on their silver and gold, that didn't equate to what I could buy an ounce of silver for, and I was very confused about it. I was like, well, hang on, why is an ounce of silver going to cost me £22 from a dealer when the price of silver is £10 an ounce? It didn't make sense to me. So the spot price is, of course, a global metric by which, that's ultimately what spot is deemed to be valued. It's a fluctuating number, of course, and it is important to remember that it is governed by powers greater than you and I can possibly fathom, with macroeconomics and global economics. And there's a lot of course, theories about how the spot price is artificially manipulated and kept down. I'm not a conspiracy theorist. I don't like, hypothesizing on things I don't know enough about. Read into that what you will, but it's one thing that is certain is that we don't, as common stackers, know where the spot price is going to be one day to the next. So what we have to contend with as stackers is this idea of, well, we're going to buy some gold and silver. The spot price is telling us what gold and silver is worth coming out of the ground. So how do we then look to buy that silver relative to spot? Well, one thing that I will say right off the bat is that it is almost impossible to buy gold and silver at spot price if you're just a regular member of the public. The reason for this is that there is an economy of scale to a certain element here. Realistically, if you're going to buy gold and silver at spot price, you're going to have some significant amount of cash to get bulk discounts perhaps, and or contacts from various different industry members or mining corporations and the like as well. It's important to remember that spot price is not necessarily what the price of silver is for mining companies. They don't just have a bunch of silver that comes out of the ground and send it out to the refineries and the dealers and the mints. That is not what happens. Spot price is very much more related to this overall market for gold and silver, and ultimately it will dictate what we pay as consumers. But it's something to remember that a coin itself is never going to be worth spot, because there's a whole process of refining and production of coins, and of course then looking to sell the coins, the logistics, the transport, all of these things, cost of living. We all know what the cost of living is doing to the world right now, and all of those factors play into what comes out at the other end, a coin. So one might argue then, well, you could buy silver from the miners perhaps before it's refined. Well, a lot of the time that's not really going to be very possible or practical because they'll have minimum contract requirements. I have in fact genuinely researched this because, of course, as a producer of hand-poured silver, as a business, I wanted to look into how I could get hold of the cheapest pure 999 fine silver. And I contacted a few mining companies all the way back in like 2018, and the minimum contracts for them were quite literally metric tons per month, if not more, per year. So, of course, that's well out of the range of what I was looking for, and it's not possible. So the economy of scale definitely plays a role there. So what do we, as stackers, why do we put so much faith in what the spot price is? I see almost every week new videos and commentaries and, of course, articles on investing platforms and websites about spot price, about where it's going to go and how it's going to affect things for us stackers. The honest answer is there's a lot of spot price prediction media out there, and it's very much an interesting game to think about. And I have absolutely nothing wrong with people talking about spot price predictions and looking at past trends and looking at bigger geopolitical issues that might inform where spot prices are going to go. But ultimately, nobody knows the future. Nobody could predict the future. So it is a really interesting one to see how we as a society kind of really put a lot of effort and energy into analysing spot price history and data. So one thing that I will say is that a lot of people will always look back at the previous spot prices to see where things are going to go in the future. It's a dangerous thing to do because really what fuels, for us as stackers, the purchasing is, of course, premiums on coins and then the price at which we will look to sell them at the other end. And ultimately, the spot price means pretty much next to nothing in the past. So yes, you can look at the charts and you can see this all-time high back in 2011 of close to $50 an ounce. And it's not there yet now. And we've gone through a global pandemic and we've gone through, some really big geopolitical situations in this last couple of weeks. And yet the silver price, the gold price are not at their all-time highs. The gold got there actually for an all-time high recently, but has dropped back down very quickly since that time. So it doesn't necessarily inform about what's going to happen into the future because this world we're in is absolutely crazy and will have some huge shifts, I think, in the next couple of years as well, both economically and geopolitically. So it is going to be an interesting old ride, that's for sure. So one last little concept that I want to talk about before we wrap up today's video is that if we as buyers, are so beholden to this spot price, does it actually make a difference to our stacking journeys? And I've made a very popular video in the past talking about why I personally don't think the spot price even matters when you're looking to buy. And a prime example of that would be some of these coins which I have got here. So you can see here that I have two different gold coins, two different 1 ounce gold coins, both exactly the same weight, but very different price paid for each. This was at the height of one of gold's big spikes back in 2020 as the pandemic was ravaging through and gold prices were high. This was a new coin with about a 5% premium, 2021 Britannia. And then over here, £1,381, and this was bought nigh on 7 months later. And you can see the quite different price point. And one would argue that this is actually a higher premium coin, the complete edition of the Queen's Beast series. So you can see here that I am sitting on 2 ounces of gold, which are ultimately fundamentally the same, but very different prices paid. I'm not fussed by that. I'm not bothered by that. It's a long-term game. And if you are playing the long-term game, spot price really doesn't matter when buying. If you're stacking and starting to get this journey going and you've got the intentions of holding for a very long time, then it does not matter. You can average out and even out your dips, your highs on those purchase points. Sitting at home and obsessing over the spot price of gold and silver as to when you're going to look to buy a particular order of something is very dangerous because it's emotionally damaging, I think, is probably the best way to look at it, because I've done it myself, I've done it countless times, where you've seen an opportunity to buy a coin, and you then wait for the spot price, and you've got this ticker in the basket sometimes as well, and you don't buy because you think, actually, no, I bought another ounce of gold last week for £50 cheaper, so I'm just going to leave this for now and see. And then, of course, gold will go up. Now, sometimes it will go down, you'll get the best deal, and you'll feel great about it, but it's tantamount to kind of gambling. And my argument here is that if you are looking to buy an ounce of gold right now, and you're thinking it's a little bit expensive, if you're planning to hold it for 20, 30 years, the difference of buying it now and buying it in a few weeks when you might get an extra £50 off your purchase price will make very little difference over the long haul. You are here for this as a long-term investment, and for me, that's how I look at it. I don't worry about the fact that I've paid £1,540 for this particular 1 ounce gold coin, whereas this one over here, £1,381. It's not a problem for me. And you just got to look at it in the sort of bigger picture, I think, is what I'm trying to say here, and that really does make a difference for people. The only time that spot price really comes into play as a tangible, real factor is if you have to sell your gold quickly in an emergency, because you do use it dealers use it as a reference point for their purchasing. And often it can be below spot price. And my argument here is that spot price is a concept which should be used as a starting point. I don't think people should ever have offers on the table for less than spot price on pure gold and silver, certainly in coin form. I can see an argument to be had for things like old sterling silver, spoons or scrap metal and things like that, that quite honestly a dealer will just have to sell on and have refined, or a refinery will have to do it, because again, that's a step in a chain of logistics, of manufacturing, of actual tangible work and expense that needs to be done to it to get it to a usable state again. But in my opinion, nobody should ever accept less than spot price for gold and silver in coin form. It's not right. It really isn't. So spot price is both useful and completely useless at the same time. Doing my typical kind of presenting both sides of the argument here. For me, I'm not really bothered by it at all. I see it as a good indicator of how things are going generally in the world. If you get huge movements, often it can be down to bigger issues within the world that we have very little control or say over as individual stackers. So be careful, be wary, be understanding that it is not the defining thing about what prices are for silver and gold. Premiums on retail when you buy and when you sell also dictate a lot of these things in here. So that's my take on the spot price. I think it is an interesting concept, one that I'm not beholden to, but I know that a lot of people are very, very, well, for want of a better phrase, obsessed with it, and will constantly check it and look at it and measure. You get these concepts of silver is going to get to $30 an ounce. That is the key number on the spot price. It means nothing, in all honesty. It just is. Why 30? Why not 29? Why not 31? It means absolutely nothing. So that's my take on it. I'd love to know what you think. If you have enjoyed this video, then let me and YouTube know by hitting that thumbs up button. And if you've enjoyed our little ramble here and this series of videos that we're doing as a complete guide, then you know what to do. Hit that thumbs up button and subscribe if you're not subscribed. And if you want to see the other videos in the series, there's a playlist down below as well. Otherwise, that is it from me today. A big thank you to you all for watching. We'll see you on the next video. And as always, please make sure that you like, share, comment, and subscribe for more.